Good afternoon, everybody, and thank you for attending what is our final session in our spring-summer series of webinars in social housing. And today our webinar is in relation to addressing the risk of fraud in the social housing sector. So to introduce our speakers, I'm Fiona McLeod. I'm a senior associate within our government regulation and competition team. I'm also an accredited specialist in housing and residential tenancy law. I'm not going to be doing any speaking today because I'm going to pass over to my colleagues Ramsey Hall and Tony Convery, who both sit with me in the government regulation and competition team. Ramsey Hall is a senior associate and he's also part of our corporate crime and investigations practice group. He represents organisations and senior individuals across a range of sectors on regulatory compliance, investigations and prosecutions. Ramsey has significant experience in this sector, and claim to fame is that he has been ranked for the last 3 years as an associate to watch within chambers, which is quite an achievement. Joining Ramsey this afternoon is my colleague Tony Convery. Tony is a solicitor, he sits within GRC as well, and he also has specialism in corporate crime and investigations. He regularly acts for public and private clients, and he advises on public law and regulatory issues, as well as corporate crime and investigations. He has a very strong litigation credentials, and Tony regularly works with our social housing clients and has appeared in sheriff courts for civil and criminal cases throughout Scotland. So that's who you're going to be hearing from. I'm now going to turn my mic off and my camera off, and I'll join you all at the end of the webinar. Over to you guys.
Thanks, Fiona, for the kind introductions, and good afternoon, everyone. It's a pleasure to be speaking at the final series, and hopefully we do it justice by ending it with a bang. I'm going to start by running through what Tony and I will cover today. So in the first instance, we're going to explain the kinds of fraud that we see regularly and which impact businesses. We'll then move on to focus on fraud risks in the social housing sector, before finishing up on fraud prevention measures and steps to take in the event of a fraud incident. And if we can move on, with that being said, I'm going to kick off by asking what we mean by fraud. Now that might sound like a deep existential question, but in reality, what I want to do is to talk through the various forms that fraud can take. And to help answer the question, we can look to the news. Fraud instances are reported on an almost daily basis across the UK and internationally. So if you suspend disbelief for a second and imagine that I'm Hugh Edwards presenting BBC News at 10 PM, I'm going to talk through a day in the life of fraud reporting. There are 4 examples on the slide, and before we get into those, I saw earlier today a report around a £4 million loss by Dumfries and Galloway Council in relation to a roads contract, which has prompted a review of their anti-fraud procedures. Turning to the slides, first at the top left-hand corner, we have concerns in the social housing sector around fraudulent waiting list applications, including false homeless list applications. And each case of those kinds of fraud is estimated to cost £93,000. So at the outset, we can see a high value to fraud. If we can then move to the bottom left-hand corner, we see an accountant called Stephen Day taking on senior roles in 4 organisations. He used his senior position to remove funds from their accounts and attempted to hide the trail by concealing false ledgers. In the Enviro example, 2 company directors made false claims about the value of carbon credits to induce members of the public to purchase them. The directors made approximately £36 million through that fraudulent conduct. And finally, in the Peebles media case, the business took action through the civil courts to attempt recovery of 6-figure losses after the firm's credit controller paid funds to a fraudster who impersonated the company's managing director and instructed payments. A key part of the evidence was that the credit controller had ignored a fraud warning on the company's online banking system when arranging the payments. And I think overall there are 2 points worth noting from these news items. First, fraud is happening on a regular basis. And second, fraud is often reported in the press. So it will be important to have a clear process for managing media interest as part of any fraud response plan. If we can then move to the legal definitions north and south of the border, I won't spend too long on the black letter law, but I do think it's important to summarise briefly. There's a distinction between Scotland and England. In Scotland, fraud is a common law crime of a practical result caused by a false pretense. So in the Enviro example, the directors falsely inflating the value of goods they were selling is the false pretense or the lie, and the purchase of those goods and therefore the gain made by the directors is the practical result. In Scotland, the courts have interpreted the test broadly so as to capture a wide range of conduct. And if we can then move on to the position in England, the fraud scheme is different there because it's governed by legislation, mainly the Fraud Act 2006, which contains 3 overarching fraud offences. The first is fraud by false representation, and there's an example of that on the screen. Another example would be the Stephen Day case I mentioned earlier, because part of his criminal conduct was misrepresenting to 3 trusts that he was only employed by one of them, whereas in reality he was working for all of them full-time simultaneously. The next example is a failure to disclose where there's a duty to do so. A real life example of that would be an insured company making a claim for property they genuinely believe they've lost. They later find it, but don't tell the insurers and accept the insurance payout. That would be a crime. And thirdly, fraud by abuse of position. And this is a classic example of frauds that we see regularly. A senior person within a business using their position to create false invoices to be paid into personal bank accounts. Just before we move on, it's also worth noting, I think, that there's standalone legislation for certain tax evasion frauds, which apply both in England and Scotland equally. And with all of that being said, as by way of context, I now want to explain why we're seeing such regular instances of fraud. And the short answer really is that the global pandemic caused by COVID has created an opportunity for fraud and an impetus for fraud. So first, the economic disruption has meant that the focus on fraud and other financial crime prevention measures has fallen off the boardroom agenda. Organisations are very understandably fighting hard to keep their doors open. They're not necessarily thinking about regulatory compliance. Second, the wider economic downfall is a driver for individuals to engage in fraudulent conduct to make money. And linked to that, the reliance on technology that we now see across all organisations creates a risk of fraud and at the same time an opportunity for fraudsters. And then my final point would be that home working arrangements mean that there's less supervision of staff, so that there's more scope for financial misconduct and for things going wrong. And if we can move on from there, in essence, what we have today is a perfect storm for fraud to impact organisations. And given that clear risk, I would say that now is the perfect time to invest in a compliance system. The response to that might be to ask whether that investment is worth it. Well, and we can see on the slide there that the answer is it's certainly worth it because of the financial impact a fraud can have. We have eye-watering figures on the impact of frauds across the UK. £130 billion was the estimated cost of fraud across the UK before the pandemic. Now, that certainly increased as a result of the pandemic. And indeed, I note yesterday that there were reports estimating that the cost of the government funds like the job retention scheme and the losses as a result of that through fraudulent claims could be up to £27 billion. So we're talking huge stakes here. Indeed, we see on the slide that the National Audit Office again have come to figures of several £billion as the cost of fraud. So all in all, fraud is a very serious issue for organisations across the UK. Our position would be that it's much better to invest in a system that limits the risk of a fraud rather than being one of the organisations that fall victim bear the cost. I'm now going to pass over to Tony, who is going to cover fraud examples in the social housing sector. So Tony, over to you.
Thank you, Ramsey, and good afternoon, everybody. We're going to start with a key aspect of social housing, its tenancies and tenants as a key area of vulnerability in relation to fraud. And this can manifest itself in a variety of ways. So the first kind of most basic way it can manifest itself is by identity fraud, by people purporting to be tenants or trying to obtain tenancy status. That can be, for example, by assuming the identity of an existing tenant when they are not in fact the existing tenant, or by using false paperwork or an existing false identity to try and obtain homelessness status or other social housing provision. Another type of tenancy fraud that we see is non-residence. So that's where a tenant's holding out that the tenancy that they have is their only principal home, but instead it's been used as a secondary property, and the tenant in fact resides there infrequently or indeed not at all. And associated with that type of fraud, we see two things. First, we have illegal subletting, whereby the person not resident in the tenancy decides they're going to make some money by having someone else resident there and sublets the tenancy accordingly, albeit unlawfully. And the kind of second variation of that goes further, where we have the concept of key selling, whereby the tenant purports to sell their tenancy to someone else, allow someone else to reside within the property provided for in their tenancy for a one-off payment or reward. And so we can see that tenancy fraud is a key area of risk for social landlords, but fraud in social housing sector extends beyond simply tenancies. And if we can move on to the next slide, we'll see that fraud manifests itself much more broadly than that. One instance, for example, is fraudulent misrepresentation, and this perhaps is of a particular area of particular vulnerability for those involved in the financing of social housing initiatives. A key and a basic example of that would be, for example, the presentation of inaccurate financial statements in order to obtain financing in the form of a bank loan or similar. Within both social housing financiers and social landlords themselves, there's a vulnerability to internal frauds. And Ramsey talked about some examples of internal fraud already. Internal fraud can vary in its size, its scale, and its complexity. At its most basic, it can be things like false or inflated expenses claims. It could include, for example, a senior officer within a social landlord or within a company using confidential business information for personal gain. But it can also be something much more complex than that. And we have, for example, a recent example of a tax consultant holding themselves out as a provider of payroll services and stealing £6.9 million of pay for construction workers using a complex web of bank accounts and companies. Thirdly, we have invoice frauds. And again, this is a type of fraud that can manifest itself in a couple of ways, both of which are areas of vulnerability for social landlords. The first example is where a genuine supplier of social landlord, a genuine supplier submits false or inflated invoices for goods and or services. A variation of that is where a person impersonating a genuine supplier submits a false invoice and has payment directed their way accordingly. And if we can move on, that takes us to the concept of supply chain fraud. Now, supply chain fraud can be made up of many of the types of fraud we've discussed already. And it does seem to us to be a key risk area for registered social landlords. At its most basic, closing the name, is fraudulent conduct by the supplier of goods or services, but it can occur in different ways. It can be the false invoicing example that we've already talked about of invoices for work not done or services not provided. It can be more qualitative, holding goods or services out as meeting certain quality standards, which they do not, for example, in the construction of buildings. Or it can be a bit more nebulous. It can be a corruption of the supply chain as a whole. So, for example, the bribery taking place as part of a procurement process, which in turn results in the appointment of a contractor who ultimately is not the deserving winner and in fact is inappropriate. And thereafter that opens the way to fraud. And if we move on. So that's the way that fraud is impacting, it has a potential to impact the social housing sector. But what are the regulators doing about it? Well, there's a variety of regulators which interact to greater or lesser extents with the social housing sector. First and foremost in relation to fraud is Police Scotland's Economic Crime Unit. Now that is a specialist unit within Police Scotland dealing with economic and financial crime. It's an entity that we at Brodie's have a strong relationship with based upon our work on a number of investigations. Just now they have a strong focus on online frauds and on cyber attacks, and they are in the process of developing a new cyber excellence centre. And that will be a key area of focus for them in the years to come. Secondly, we have the Scottish Housing Regulator. In the past couple of years, fraud has proven to be a real area of focus for the SHR. The SHR has identified that a fraud prevention obligation arises directly from the regulatory framework. They've been clear about the need for senior leadership to focus on fraud and for the provision of appropriate resourcing for fraud prevention. And they've been communicating with social landlords throughout the pandemic, requesting and directing them to maintain their focus on fraud prevention, even in the very difficult times that social landlords have faced in the course of the pandemic. Turning to HMRC, it is the regulator responsible for investigation of the fraudulent evasion of income tax that Ramsey discussed earlier, of income tax, I should say, and other taxes. And that has remained its key focus throughout the pandemic. In recent months, we've seen it turning its attention to use of government support during the pandemic, and we've heard from Ramsey about the vast sums thought to have been fraudulently acquired through that government support. And we can expect that to be an area of focus in years to come. The Financial Conduct Authority is the regulator of financial services in the United Kingdom. It is a regulator that directly regulates a number of social landlords in Scotland. They have been focusing recently on preventing investment fraud. They have been very clear that they expect regulated entities to have measures in place in respect of fraud prevention. And the mood music we've been getting from them in recent months is of an increased appetite for regulatory enforcement. And we can expect the FCA to be an active and engaged regulator, particularly in relation to fraud prevention in the coming years. Finally, the Serious Fraud Office, once again, the clue's in the name, they are interested in the investigation and prosecution of serious and complex frauds. Throughout the pandemic, they've been continuing their work in this area and have concluded what are called deferred prosecution agreements with a number of notable organisations. That means that those organisations have accepted their involvement in criminal wrongdoing and have required to pay significant financial penalties under the supervision of a court and in the public eye. So, in summary, a series of active and engaged regulators that all those working in the social housing sector need to be aware of and need to be mindful of their obligations in respect of. And back to you, Ramsey.
Yeah, thanks, Tony. And I think just to summarise that, I think three key takeaway points for me from that. One, that point that you just mentioned at the end about a series of active regulators, that is set to continue as the instances of fraud increase. So all the more reason to have anti-fraud compliance controls in place across organisations. Second point would be the rise of supply chain fraud. I know you landed on that, Tony. I agree entirely with that. And just to expand out on the procurement process concern, we have seen several instances of briberies in the procurement process, opening the way to fraud. And I know that procurement processes are often used in the social housing sector to take on contractors, so I think this is entirely relevant. And if you imagine an unqualified contractor getting a gig, essentially, because of a bribe, what does that do? Well, that creates a risk of frauds, because that unqualified contractor is unlikely to be able to provide work to the required standard. They may produce work of poor quality, but at the same time, they will want to make a quick and unjustified profit. That increases the risk of them submitting false or inflated invoices. And then to close off the point, I think the points that you're making, Tony, I think internal fraud continues to be a really important one. The risk of staff across organisations using access to financial information and having the power to transfer money from businesses to personal accounts continues to be a live risk for organisations across all sectors. And with that sort of word of, I suppose, dread filled in your minds, if we can move on to now to the steps that we can take to protect against fraud. So the next couple of slides hopefully are a more positive message for the audience. A quick caveat, I suppose, is that no compliance system is guaranteed to remove the risk of fraud entirely, but you can take steps to reduce that risk. And last month, with that in mind, HMRC issued guidance on managing the risks of fraud across supply chains. As you can imagine, the focus of the guidance is on tax evasion offences, but the general principles in the guidance apply equally to the other kinds of fraud that Tony and I have covered. The guidance splits the steps organisations should take into 3: check, act and review. And there's no rocket science to this, but I do think it's helpful to cover the points. So by check, we mean assessing existing compliance systems and business risks. By act, we mean understanding supply chains. Who are your suppliers, your contractors, and are you satisfied that they meet your own compliance standards? Finally, by review, we mean regularly updating due diligence procedures and other compliance systems. Are you auditing the conduct of your suppliers on a regular basis? Is there a system in place to monitor the conduct of your staff on a regular basis? As we touched on earlier, now is the time to get your systems in order to address the change in the risk profile brought on by the impacts of the pandemic. So if we can move on, the next question becomes, well, how do you check, act and review in practice? What does that mean? Well, the answer is it's probably steps that many of those attending this webinar are already taking. What it means is auditing your own policies and procedures. Do you have anti-fraud policies and procedures? If not, you should do. If you do they adequately deal with the risks presented by fraud in today's world? Second, you want to carry out due diligence on potential contractors and suppliers, as well as their directors before engaging with them. Organisations should also insist on contractual clauses creating a right to monitor and to audit those within the supply chain. And indeed, vitally important is to actually use those contractual powers to carry out audits and indeed to take any action as a result of audit findings. And finally, in that, or linked to that, you want to assess supplier performance on a regular basis, but particularly important where there's a change in their operating models or indeed in their financial profile. And a final point on this that's not covered on the slides, but I'd encourage all organisations to keep records that those steps have been taken. Having a record of these steps or these compliance measures is clear evidence for regulators and other stakeholders that the organisation takes anti-fraud seriously. And if we can move on and to signpost, we're now going from the positive steps that organisations can take into the worrying situation of how do you respond in the event of a fraud concern within your organisation. So I want to start by saying that in the first 48 hours, steps can be taken that can have a significant impact on the outcome. So those first 48 hours are crucial. And if you can imagine for a second that a staff member has raised a concern that a contractor has been inflating their invoices, there are certain fundamental points that an organisation would want to investigate internally before deciding its next steps. Those points would include what has happened, who is responsible? Is it just the contractor, or are other parties involved? Is there a concern that an employee within the organisation is involved? What is the value of the fraud, i.e. what is the amount that's been lost? And where are those funds? Now that's vital if attempts are to be made to freeze and recover the monies, which we're going to discuss in a few minutes. And finally, you would want to understand whether the concerning conduct is ongoing or whether it's stopped. So if we can just bring up those points, that's a nice natural phase to finish my thought, because if the concern is ongoing, it will be really important to take steps to almost ring fence the parties of concern and to ensure that the damage being done is limited as far as possible. So what I've done is I've raised a bunch of questions, and I'm going to ask Tony now. Tony, how do we get answers to these questions?
Okay, thank you, Ramsey. So I think the first thing that needs to be done is an investigation team needs to be put in place here. And choosing an investigation team is crucially important in terms of setting the way forward. You need to consider the investigator's expertise, their seniority as regards the potential people involved in the fraud, and also their capacity to carry out that kind of work. Another key initial consideration is preserving evidence. Very often these days, evidence will be in the form of emails or other electronic form. It's crucial that steps are taken at a very early stage to preserve that evidence to avoid it being lost. Losing that evidence can prevent a proper investigation being carried out, and it can also have a significant impact on the ability of an organisation that's fallen victim of fraud to be able to recover its losses down the line. So preserve the evidence as quickly as you can. Thirdly, and connected with the first two, consider what professional support you need. Is it IT support to be able to essentially freeze the electronic systems as they are in order the evidence can be maintained? Is it professional investigatory support from lawyers, for example, who are able to come in and provide investigative strategy and guidance and support, and if necessary, carry out the investigation on the organisation's behalf? So those are the three key things, I think, Ramsey, that an organisation that has come upon these questions needs to immediately think about.
Yeah, I would agree entirely with everything you say, Tony. And I suppose if we can move on one step further, a reasonable question would be, well, what do we get out of the investigation? What are the benefits of conducting this internal investigation? Why not just refer the matter immediately to these specialist authorities that you were talking about earlier, Tony? Well, there are several benefits to conducting an internal investigation. First, it allows an organisation to understand itself what has happened through the gathering of evidence. And really important there is the idea of having a degree of control as to how the evidence is gathered. If you refer matters immediately to the specialist authorities, they will take over control of the investigation. The next benefit of an internal investigation is that it informs the recovery process and any other options that the organisation wishes to pursue. So that might be, for instance, after an internal investigation, reporting to the authorities, raising a court action for recovery, as well as, or instead of, disciplinary action for staff members found to be involved. A third benefit of an investigation is that it helps identify any compliance system gaps. So if you carry out an internal investigation, that gives visibility to an organisation on any issues or shortcomings in its anti-fraud procedures, which gives you an opportunity to update your systems and controls to try to ensure it doesn't happen again. And my final point is that the regulators and other stakeholders may expect, or indeed require, an investigation to be carried out by an organisation. Carrying out an internal investigation sends a clear message that something is being done. So hopefully we have persuaded you as to the benefits of an internal investigation. And Tony, a question for you from me. What do you take into account when you're setting up that internal investigation?
Thank you, Ramsey. I think the first thing that an organisation needs to do, and possibly with the benefit of professional advice from lawyers, for example, is to work out the scope of the investigation. It's essential to demark clearly at the outset of an investigation its scope. Otherwise, the investigation risks becoming unwieldy, of going on too long, and obtaining evidence, lots of evidence, but not necessarily relevant evidence. So you need to devise a scope that is sufficiently narrow, that it avoids that, but is sufficiently broad that it allows all relevant evidence to be obtained, investigated, and considered. Secondly, and it's drawing upon what I was talking about before, consider the expertise of the investigators. Do you have people within your organisation who are able to carry out this kind of investigation? If so, do they need support, external support? If not, should you be bringing in external support in order to carry out the investigative process? Thirdly, I think an organisation has to address its mind to what's going to happen at the end of the investigation. So an investigation will take place, a report will be written, but will that report be shared only with internal stakeholders, or is that report going to, for example, inform communications with regulators or with third parties? And that takes us, if we bring those 3 points up, or a few points up, if that's okay. So you can see I've discussed those there, and it takes us nicely onto what we at Brodie's call the 3 Rs. And these are particular considerations that we think have to be had regard to still at this early stage of the investigative process. The first is engagement with regulators and with the police, and Ramsey's talked about the varying considerations about when it will be appropriate and at what stage it will be appropriate to engage with regulators. It will be interesting to note for the registered social landlords amongst us, for example, that the SHR considers instances of fraud a notifiable event. So those are the kind of factors that will need to be in your mind, and there can be no one-size-fits-all answer in determining when it's best to engage with the regulator. Again, if in doubt, seek professional advice. Secondly, it comes on to the timing point, is the prospect of a criminal investigation. If you've ever been involved as a witness or in any way in a criminal investigation, perhaps the thing that you've come away with most is that it doesn't go very quickly often. And that is particularly the case, I don't think it's unfair to say, in respect of financial crime, for understandable reasons, because it's complex and requires a lot of work. But it's important for organisations to have in their mind at the outset that this is unlikely to be a process that completes in a matter of days or weeks in the event that the matter does require to be reported to the police. Secondly, the second R of our 3 is to do with recovery. Now, if an organisation has suffered fraud, it might wish to recover the money, and there might be expectations from its shareholders, from its regulators, and from the public that it will take steps to recover the money it has lost. There are different ways to go about doing this, but again, it's important that an organisation which has had a fraud incident applies its mind to these questions at an early stage. One possible way to go about recovering money would be to raise a civil action against the person who is said to be responsible for the fraudulent incident, or against the group of people or organisations said to be responsible for the fraud. An alternative would be for the organisation that has been the victim of the fraudulent conduct to seek a compensation order from the criminal courts after someone has been successfully prosecuted for the fraud. Again, these are complex matters, and there's no one-size-fits-all answer as to whether a civil action or seeking compensation through the criminal process is preferable. What's important to note, though, is that for organisations that have fallen victim to frauds, it will be in their interest to take steps as quickly as possible to prevent the fraudulent gains of those who've carried out the fraud from being spread further, which would make it more difficult for them to recover their losses. So if there's going to be a need for recovery down the line, if that's something that an organisation thinks it might want to do, it should take steps quickly, engage professional support, and liaise with regulators with a view to having their interests noted and stopping funds going further missing. And thirdly, and this draws upon all the things we've talked about, is that fraud is a risk not only to the purse, but also to reputation. Falling victim to frauds, rightly or wrongly, can raise questions about internal fraud prevention and the strategies that Ramsey and I have talked about. This is particularly the case if there's a criminal process, because organisations that have fallen victim to fraud will very often and very properly be restricted in what they're able to say about what has happened pending a criminal process. And for that reason, it makes it all the more important at the outset of an investigative process and in the light of a fraud incident to devise an appropriate reputation management strategy, which is able to preserve against unwarranted damage to an organisation's reputation and advance the positive messages that it's seeking to put forward. And those are what we call the 3 Rs. And I'll hand back to a 4th R in Ramsey Hall.
Well, that's a great segue, Tony. I enjoyed that one. To go from the 4th R back into the 3rd R, because I think it's a really important point, this idea of reputation, and this is bringing the webinar full circle, because I started off by talking through some examples of fraud being reported. Fraud is reported regularly. If there's a fraud incident, the media are likely to be interested in it. That can have a significant impact on reputation. So I would agree entirely with Tony when he says the impact of fraud is not limited to the purse. It can also be on reputation. That can be a long-term impact. So vital to have a media line and a press interest policy in place so that you can deal with it appropriately in the event of a fraud incident. But if we move on from there, that completes the speaking part of the presentation for us. Now, we've taken just over 35 minutes, which I think is good enough going. There are, though, a few questions, and we do have a wee bit of time. So perhaps I'll pick out 2 questions, and I'll take one, and Tony, you can have the fortune of having the other one. This first question I think is for me, because it's a point I made. So at what stage do you speak to the authorities? That's a fair question. So Tony has covered the point about when you engage with the regulator, and indeed there may well be an obligation to engage with the Scottish Housing Regulator as a notifiable event. That aside, when do you engage with the specialist criminal authorities, so police, HMRC, for instance? The answer, I suppose, is it depends. And I think there are 2 fundamental points that you want to consider when deciding when to report to the criminal authorities. One, what is your ultimate driver? Is an organisation solely interested in recovering the lost funds? Or do they also want to encourage the criminal authorities to investigate and potentially prosecute the fraudsters? And 2, has the organisation identified enough material to report the concern in a credible manner to the authorities? And my point on that is that you will only know the answer once the internal investigation has been carried out, at least to some extent. So that would be our response on that point. I can see that there's another question. So Tony, I'm going to fling this your way.
Okay.
The question reads, what's the first thing you should do if you have a concern about one of your suppliers?
Okay. So I think the first thing you need to do is assess the nature of that concern. What is that concern? Is it a serious one? And carry out a kind of initial triage. If it is a concern that seems to have legs, it's one that is causing genuine concern, then it's back to the steps we talked about before. I think it's about considering whether there's a need for an investigation, and if so, how's that investigation to take place. It's about agreeing the scope of the investigation that is to follow, and it's about setting up an investigation team and providing those investigators with the support they need. Throughout all of that, I think what's key is to be recording your reasons and recording how you've come about your decisions, because that will assist you in future engagement, whether that be with regulators, with shareholders, or with others. And it will assist, for example, if you take the view that having considered the concern, it actually isn't well-founded and there's no need for further action, it will assist you if anyone ever comes back and says, well, why didn't you look into this further, that you've recorded your reasoning with the benefit of professional advice if necessary. That will give you a good explanation for that kind of circumstance.
Thanks, Tony. And I think that brings to a close the question section. And before I pass back to Fiona, I just want to say that hopefully we have communicated two key messages. Really, one, fraud is a big risk. It's a big risk for the social housing sector. Two, and this is a more positive message, there are measures that can be implemented to limit the risk and to allow an organisation to respond appropriately to fraud concerns. And what Tony and I have been at pains to recommend is that it's much better to implement those measures now than to wait to be the victim of a fraud. And with that message, Fiona, I will hand back to you.
Thank you very much, both of you. That was really, really interesting and a smashing end to our webinar series for the spring summer. So just to flag on that point, other than to say thank you very much to Ramsey and Tony for presenting this afternoon, we will be launching an autumn-winter webinar series for social housing. So if there's any topics that you would like to cover, or any of your colleagues would like particular topics covered, please don't hesitate to get in contact with us and let us know what you would like to cover. It's better that than we just tell you what we think you want to hear. And also to say that if any questions come to mind after today's webinar session, please don't hesitate to contact either myself, Ramsey, or Tony, and their contact details are on the slide. And as that brings us quite closely to quarter to three, sorry, just to say have a lovely afternoon. Thank you for joining us, and we hope to get you enjoy some sunshine soon.